There's still a lot of interest in overseas targeting from corporate IROs, and clearly a lot of companies have been going to Europe, particularly over that kind of $2 billion market cap level have really made Europe part of their annual or semi-annual outreach to the buy side. And I think the big question is what's next. And we have a lot of clients asking us about other markets, particularly in Asia. And we just had a very interesting conversation at the Lunch and Learn panel where we had a representative from a major technology company, a representative from corporate access, and a representative from a Chinese investment bank. And the feeling I think from folks is outside of the sovereign wealth funds, CIC and SAFE in China and others, the market, particularly in China, is still very nascent. It's relatively small and it's early days. So the return, at least the initial return on going to China, is probably going to be low, but something that was stressed very importantly by the gentleman from the Chinese investment bank was that China really is all about relationships, and you can't expect immediate returns from any trips to China. What was interesting though is there's a market in China called QDII, which is Qualified Domestic International Investors, and these are essentially mainland Chinese investors that have the ability to invest outside of China. And there's been some slowdown in the growth of that marketplace as assets being dedicated from investors in China has really slowed to international equities since the financial crisis. So I think investment from China, and particularly mainland China, is really not going to be as swift as many have presumed over the past several months. So that's a market that is certainly still something you consider, but I think other places, in particular Hong Kong, Singapore, and Australia, which has grown significantly, are really the places in Asia that you should focus on in the immediate future.